Hello, hello, hello. Welcome to Trading Made Easy. We are going to jump right in to our markup, marking up over the weekend in preparation of the upcoming week. And for those of you that are new here to the Trading Made Easy channel, my name is Janice. I teach simple, easy trading methods that anyone can use to begin profiting consistently in the market, whether you are a intraday trader, scalper, or swing trader. Market structure is the catalyst for your success, and that's what I teach. So if you're struggling in the market and you're not consistent, and one day you think you have it and the next day you don't, you're certainly at the right place, because I'm going to show you simple, easy ways of marking up the chart, identifying potential, excuse me, potential entry and exit points. I focus on 20 to 25 pips. However, market structure will certainly allow you to identify more pips. It's just a matter of securing the pips that you have already obtained. And so subscribe to the channel, because these are the things that I'll be sharing and teaching along the way. So let's get into it. We're going to go ahead and mark up, just to let you know, simple and easy. So I don't have a lot going on my charts. I try to keep it as clean as possible, because that is how I learn, and I confirm as I go, and until it's time to enter, and then everything needs to be saying the same thing at the same time. And so what I want to do is just start off on the weekly. And for the most part, what I'm looking for is to identify where price stopped and turned around. Certainly we identify what the trend is as well. And so we clearly see that we've been making higher highs and higher lows. We've broken out of this range here. We've broken out of this range here, and we began making higher highs and higher lows. So yes, we are bullish as a trend. And where did price stop and turn around? I want to identify that with a horizontal. Price came up to this point, it stopped, and then it began its way down. It has not come back up to break this high. And so I want to identify that as my resistance area, and I'll do the same for my support area. Price came down to this point and it has not broken this area. So I want to identify that with a horizontal line. So I have my weekly range in which price is moving. Price is moving between the high and low on the weekly here. From that point, I simply just drop down to the daily. And on the daily, I am essentially doing the same thing, right? I'm doing the same thing. Real quick, easy markups that you can do that will help you to identify um, basically where price is going. And we wait for price to react to these areas before we actually execute. So on the daily, I'm looking to see, of course, we have a daily trend is bullish here as well. As you can see, we broke, this was the last high before we continued in this upward motion, and we broke this area. We've been making higher highs and higher lows since, so we are overall, we have a bullish trend on the daily. So where did price stop and turn around on the daily? Now, sometimes where price stopped and turned around on the weekly is the same area on the daily, and that's perfectly okay. So as you can see right in here, this is where on the daily price did the same thing in this area where it stopped. But I like to come in a little more so that I can have a range in between the weekly. And so I will just look for the next area of where price stopped and turned around. And as you can see, price came up in this area and it dropped. It came up in here and then it dropped because it broke. This area right here was broken by these candles here. But this area, price has not come back up to break it. So this is where I will identify it, drop my line and change my colors real quick. This becomes very, very robotic as you continue to do it. And we'll do the same thing for support, which is right in here. Price has not come back down to break this area as well. So now we have our outer areas where price for the weekly, where price played, is stopped and turned around. And then we have our inner area, both very strong price point areas, being that is the weekly and the daily. I just use the horizontal line. A lot of people use the trend line. They have an outer trend line and an inner trend line. I use a horizontal, outer horizontal, inner horizontal, right? And so now that we've identified that, we're going to drop down to the 4 hour. And what I like to do on a daily is just see, what price did, how did price get to where it is. And obviously we pulled back, right? We were in a correction, and then we started making our way back up. And so is a potential that price wants to move in a bullish direction. On Friday, it did close with a bullish candle as well. So the bullish candle tells us whether it's bullish or bearish, but it does let us know what direction price has been going in on the lower time frame. Now, one thing I will say is anytime that we have bullish momentum, bullish movement, it is a setup for a sale, because it's going to get to a point where it's going to hit resistance. And the same holds true opposite. If it's bearish, it's a setup for a buy, because it will hit a point of support. So we want to determine what price is doing, where price is at in relation to the next area of resistance, because it closed with a bullish candle. So and we have our first level of resistance here, and on the daily, from where price closed to that next area of resistance is roughly about 131 pips. So what that tells me is I have a potential 131 pip move to the upside if price continues to go in that direction, if it shows me that that's the direction that it's going in, right? So now we have that insight. And obviously, price can certainly break below and continue down. Now, if it does, right, if it does right in this area here, like I said, it did not come back down here. So we can certainly use that area as well. But if I was looking for a break to the downside, I will be looking at this area here. I'm not going to drop the line here because of what I'm going to take care of that on a lower time frame. Okay. I will be looking for price to break this level, come back and retest the low, because then it's giving me bearish communication. So let's drop down to the 4 hour. Now on the 4 hour, this is where I identify my zones. The zones are areas where price, there are areas of interest for me where price will potentially react, right? And I'm still using um, the question, where did price stop and turn around? That's going to always point you in the right direction. And so price in this area right here, this would be an area of interest where price will potentially reject, push through, or reject or push through. So what I do at this point is I look for engulfing candles to identify that, right? I look for engulfing candles to identify that. And if I'm looking for a bullish move, I like to look for a bullish engulfing candle, just to coincide with that. Now, the reason behind that is because it tells me that bulls are in the area, right? So if I'm going to buy from a particular area, I would like to see in the past that buyers was in that area. Same applies for sales. I want to sell in areas where I see sellers were in that area, and I will identify that with my zone. So I do see a bullish engulfing candle here. So I'll take the high and low of the previous candle and I will identify my zone. Now this area becomes an area for a supply zone, basically, because we are approaching an area of resistance. So, but the fact that if price breaks this area, because these sellers are here as well. So if price breaks this area, that is a confirmation to me that price is going to continue in this upward direction. Right? So look at what happened in the past. When price came into this zone, what happened? It sold. Price came back into the zone, what happened? It sold. And as you can see, we played around in here and it's sold, but it's dancing in here. So if price comes back into here, I'm looking for price to do one or two things. Eventually price will break, right? So I'm looking for price to break. If price breaks this zone, we would have broken out of an area where sellers was pushing price down, right? We would have broken out of that into the upward direction. So that's a strong bullish communication that price wants to continue to go up, right? So we have buyers in the area, we have sellers in the area, and we have other confirmations that's telling us that price is looking bullish. I'll say that it's looking bullish. So that is that zone there, and I'll do the same for my support, right? I'll do the same for my support. And I'm just looking for either a large candle or an engulfing candle. Now there's a lot of rejection around in this area here. We have a large bearish candle here. So I'm going to use this area for my zone, right? And so now I have my support area here and my resistance area here. And we're waiting now for a break. Right? And it's on the 4 hour, which is relatively strong. And so if we have a break, that's a strong indication that price is likely to go in the direction that it broke away from. Right? It's a game of probabilities. And so now that that's identified, and we also have already identified the pip potential, um, before price goes up to this area. Now on the 4 hour, I like to pull out my fib and I like to see where did price close. Being that this is Friday's close, where did that candle close on the fib? Right? Where did it close on the fib? And so when I look at that candle close right here, we closed above the 38, right? It looks like a slight wick to the 50. Didn't quite touch the 50, but we're right at the 50. Now, that being a golden zone, the expectation is that price will reject from that area. So we may see price pull back to the 38 before it continues to the upside. That's what we may potentially see. That's what we see on the 4 hour, right? Now I'm gonna leave this fib here. I may have to change it, but let's drop down to the 1 hour because we want to see, what the price do. So we need a little more data, and I'm just gonna put one on that way I can see it clearly. Right? So we just drop down so we can get more data, right? The more data we have, the more insight we have as well. So on here, I'm going to take this swing high to this swing low, and price is above my trend line, right? On the daily, I'm sorry, on the 1 hour. We've certainly broke above the trend line, so we have made strong bullish movement. And the last candle on Friday closed. Again, it was above the 38. And so we're approaching the 50. So we did when we broke the 38, we did come back to retest it. We retested the high of it, right? So we broke the 38 here, came back, retested. We didn't close back below it. We retested the high, and that's bullish communication. And this is why we see price continuing to make its move up. So the next area is up to the 50. Once price get to the 50, look at what happened before when price got to the 50. We came up, we wicked, and we pushed back down, right? Let's look again. When price came up to the 50, even as support, I'm sorry, as resistance. Price came up, wicked above it, but we pushed down, right? So we see, and of course, the 50 is a golden zone, so we expect that to happen. Now let's go down. Everything that I'm doing at this point is confirming the direction price is going in, and that's bullish. It's going in the upward direction. And let me give you another key confirmation that you can use as well. One thing you want to understand about price movement is what happens on the left side repeats itself on the right side. That's price movement. Back test it for yourself. You'll see what takes place on the left repeats itself on the right. So with that being said, we can like I like to take the bars out, right? I like to take my bars out. So if I take this swing high here, right? Price has not come back up into this area thus far. Price hasn't come back here, right? It looks like it's making its way, but it has not come back here yet. So I will take my bars and I will go down to the swing low on my bars, right? So price made this move down. Remember, what happens on the left side is repeated on the right side. It's just in the opposite direction. So you could take your bars and you'll start where the previous move to where you currently are. We're currently here. Price is going up. So we're looking for the previous move where price is going down. And I went a larger scale, but you can even go, you can drill in as well. It just depends on how you want to use that, right? So I used it here because price is working its way back to this area, right? So now what I'll do is I'll take my bar and I will mirror it so that we can mirror what took place on the opposite side, right? So I mirror it, and this was the swing. Remember, I went from the swing high, swing low. So I took my bars and I'll put it at the low, right? And this is the direction that price will potentially go in. And we just wait for price to make these moves because it's going to mimic what took place previously. Now, it's not the exact volume, like the candles are not going to be the same length. It's not going to carry the same volume, but it's the direction that price will go in. That's repeated. That's what's repeated, the direction. So you're going to have short moves, long moves, up and down, but it's going to be up and down in the direction that took place previously. And it's the opposite direction. So I hope that makes sense. So you can actually leave this bar here and just follow price, as price reacts and mimics this area. But that is the direction you're going in. Now that you have that, you still want to identify those additional areas where price will have a potential reaction or rejection, and that will be right in this area here, and you'll see it coincides like with your bars, right? So you don't want to overlook this, and these bars don't take up the place of that. It just gives you visual insight as to the direction price will go in. And back test this for yourself. You can do it for a longer move or a shorter move, depending on the type of trader you are. And price responds to that, right? Really quickly, when you look at this move down that took place previously, what's happening on this side? We have the opposite move going up. It happens all the time. Look at this move here. We have this move, and then I'm going to get back to the markup. We have this move going up to this point, right? Well, that happened previously. What happens on the left side is repeated on the right side in the opposite direction. And then we have this move right here going down. We have it going up, and then we have it going down. It's really that simple, right? The volume of each candle is different. Don't worry about that. That's not what we're looking for. It's the direction. And when you have the right entry going in the right direction, that equals profits. profits, profits, right? So we want to utilize the different tools as confirmation of what you've already identified. That's the key, my friend. That's the key. But really backtest that. So we have this already identified. I'm going to leave it here so that when we come back and follow price throughout the week, we can see how it's moving within the movement that we've just identified with our bars, right? So what do we have? We have a potential 130, roughly 130 to 132 pip move from where price closed to the daily high, right? So we have that. So we have a potential 100 and I'm gonna just say 132 pip potential bullish, right? So that's going to be bullish. Uh, what did I do? Okay, I'm sorry. I was finna have a little fit. Okay, go back to JPY. That's what we trade. And here we go. So we have that potential um, to the upside, right? There we go. And that is from where price closed. Now, let's talk about entry though. Let's talk about entry at this point. So on the hour, you can also drill down on the hour as well and identify your entry. The key is price needs to do a certain thing before we do a certain thing. So price is closed at this point here. You can use your fib. You can use your fib to determine your entry. I always like to wait for a pullback. Now, when we put the fib on, it was price closed right before the 50, like right at the 50. So I would be looking for price to pull back from the 50. So in other words, I'll be looking for the 38. I will be looking for an entry up on a 38. I don't think that was my high right there. I will be looking for price on the 38, right? So I will take my fib and identify the 38, and that will become, okay, Jan, that will become your potential entry. Swing high, swing low, right? Price close right here, right between the 38 and the 50. So I will be looking for price to come back to my 38 before I take that buy, right? I wanted to pull back. In other words, I wanted to come back and retest the high of that area. Now it already retested, and we do have two bullish candles following it. So it is also an area for execution, a market execution. I personally like a pullback. So that's a potential area. That's a potential area at the 38. Okay? For a potential entry. Alrighty. So you can certainly use your fib to make that determination for a potential entry. It's structurally sound. Price reacted to this area in the past. So we're good to go there. Now we simply drop down to the 15-minute and wait for it to happen. Wait for your criteria to take place on the 15-minute, and then you enter. This is where I like to put my alerts. So if I'm looking at this area for potential entry, then I simply just right click and add an alert to this area. So they're doing a maintenance on there. Okay, so it's not available right now. They're doing some type of maintenance, but this is what you would do, right? Is put your alert here, and now you're free to go and do the things that you love to do, that you're responsible to do. Let price do whatever it's going to do. You've already identified when you are going to entertain, your trade, and you enter from that point. Now, as far as your stop, now that's going to be dependent upon your risk tolerance and all of that, your emotional management and all of that, your account size and all of that. But a principle and the rule of thumb is to place. You can, if you're doing a 1-to-1, obviously you want to place your stop at the next area of support. If you're going to be buying, then you want to place your stop at the next area of support, and that would be somewhere between, again, that's just the principle, but it's based on your entry, so it's not cookie cutter, right? It's based on your entry. So you want to use the principle of structure and the next area of support and resistance when you are identifying your risk. So if you're doing a 2-to-1, then you know it's going to be you're going to risk one time, you're going to gain 2 times more than what you're risking. But again, it depends on the entry, and depending upon the entry, you'll determine where that is. But if you use structure, if you use previous structure as a benchmark, if you will, for those areas, you should. I can't say you're going to be okay because we don't have a magic ball, but if you use structure to make that determination, you'll be in a better position. Okay, you'll be in a better position. So that is the markup. I'm looking for some bullish activity going into the week, and I'll be keeping my eye on the buys. I've already identified if price, gives me a different communication, then we'll be looking at some sales. But going into the week, I am looking and I am expecting to see price rally back up to this daily high here, which will give us roughly 130 some odd pips, maybe 100 depending on your entry. So I hope that helped, and we will keep an eye on this into the week. Have a great one. Bye bye.